All right, this is ETR's Q4 2021 earnings call summary. And as I've said in the past, utilities are really cool because most of their business is government regulated, meaning that they can't charge whatever they want to charge. They have to get permission from the government in order to charge what they charge. Historically, though, utilities have, you know, been able to strike, decent deals with the government, being as these utility companies, the larger ones anyway, are uh, beholden to shareholders. And so I'm sure in the discussions with the government regulators, it's always about, hey, we need to be able to tap the capital markets to get to get capital, to make improvements to the grid. And the way we do that is we attract them with dividends and with a steady um, rate of increase in share price. And in order to do that, we need to be able to charge X amount of dollars. And like I said, historically, there hasn't been much of an issue, not in our current economic climate anyway. And so what you're seeing here is just a simple graph of showing the typical 5 to 7% that they expect to grow by, that they have continued to grow by over the years. Um, this is the first time looking at this company that I realized that this is mainly Louisiana company. They do separate out their Louisiana business with their New Orleans business, which I think has a lot to do with their customer breakdown, um, which you'll see here, which was really nice to see because 70% of their customers are commercial and industrial. And you like that in a business because typically industrial and commercial customers are steady paying. They are customers who definitely for sure need the energy and the electricity and will not falter on their payments, you know, versus a residential type of customer. That, as you can see here, is roughly 30%. The other thing that's important to note here is that this down here is the Louisiana business, which makes up almost 50% of their their customers. So again, didn't really understand this before, but Entergy really is a Louisiana utility for the most part. They do, of course, have customers in Texas, Arkansas, and Mississippi, but the majority of their customers are in Louisiana. They did grow their sales roughly 2% this year, which is not bad. They talked about losing a little bit of money on weather. And if I were to do a fundamental analysis on this company, which uh, I doubt I will, just because this is a small position for us. But if I were to, I'll definitely want to look at what the past weather inputs and outputs are for this company, because being that they are purely Louisiana-based company, um, natural disaster is going to play a big part in their business. They did discuss getting money back on the losses that they took from the storms. But what I thought was really interesting is that it appears that the money that they're getting back for those losses comes by way of securitization bonds, meaning that they're not getting just cash from the state or the city. They're basically being allowed to issue bonds for the state and for the city, probably state bonds and municipal bonds that investors can purchase, and then Entergy will then pay back those loans with interest. Now, I haven't looked at those bonds. I imagine that maybe they got a sweetheart of a deal. Maybe there's a low interest rate that they're having to pay back on those bonds. Maybe there's some sort of special rules regarding, what happens if they miss a payment, or you never know. But I I thought that was interesting though, because like I said, you expect them to receive, you know, uh, either an increase in rates or you expect them to receive some sort of cash payment outside of what they got from insurance already. But no, they got these bonds that they're issuing. The other thing that was interesting about this particular earnings call that I was really happy I got a chance to really get a good look at is this thing called the Green Promise Tariff in Arkansas. Now, going back, Arkansas is um, a small portion of their business, 20%, but second in line, of course, to Louisiana. So I guess it's not that small, but either way, this is interesting. So the Green Promise Tariff, what is this? Well, it's these renewable energy credits, and that is something that got talked a lot about in the earnings call. Something that I kind of roll my eyes at whenever I come across it because I just it's all a bunch of government funded welfare programs, for lack of a better word. But I mean that in earnest, though. It is like welfare, where it only works if the government um, subsidizes. It's not anything that the market is asking for, right? So if there wasn't these government regulations or programs or tax credits, I don't think there will be anyone in the market actually looking for these renewable tax credits. I'm sorry, renewable energy credits, or what's the other one? You know, some of the carbon credits and all this stuff. I just think it's kind of ridiculous. But I do understand too that it is the government's way of trying to push uh, society in a certain direction, and clearly that direction is towards renewable energy, which I think, on the surface, is a good thing. I've always been interested in, I forget the name of the theory, but the theory goes something like, any life form learns to use its surroundings for its energy purposes, right? Because everything has to consume energy in order to output energy and live and thrive and procreate and so forth. So the idea is that humans are going to use their environment or their energy resources no different than any other life form. But the ability and the efficiency in which we're able to utilize our environment is what separates us from that higher plane of existence. It separates us from having better um, better lives, basically, better quality of life, right? And so, using wind, using hydropower, using sun, and all that kind of stuff, I think is a natural progression um, in that journey. But I roll my eyes at a lot of the government regulation, especially when you have large companies in this stuff, because you know government risk and political risk is real. And the moment that these credits go away, the moment that government changes direction or they lose interest, all of a sudden, um, this thing that you've put so much energy and effort into is now a liability instead of an asset. So um, let's go into a little bit of what these renewable energy credits are. Um, so they're tradable, non-tangible, and that's interesting that they're tradable. Okay, non-tangible commodities that represent proof that 1 megawatt hour of electricity was generated from renewable energy source and was then fed into the shared system of power lines that transport energy. So this is literally something like a Bitcoin. Okay, it's tradable, meaning that I can buy one and sell it to you, no problems, no questions asked. It's non-tangible, meaning that it's not anything hard. It's not hard currency. It's not an asset. It does not exist in the physical world. It's just something on a computer. Okay. And what does this non-tangible thing represent? Well, it represents the fact that 1 megawatt hour of electricity was generated from a renewable energy source and then fed into um, the grid. Now, I'm gonna I'm gonna talk about this because it's just I think it's interesting and a little weird, right? Um, so is it that the demand for these renewable energy credits are driving utility companies to generate this renewable electricity, or is it the renewable electricity being generated by the utility companies is creating this demand for persons wanting to prove that their electricity came from these energy sources? Um, I don't know. Let's go down here. I think so. And and I, and I read way more into this than what I'm showing you. But companies can purchase these renewable energy credits along with their electricity. Okay, so that's important to understand. So I already have a light bill, right? Um, and right now this is being offered in Arkansas. Okay, so I already have a light bill, and I can choose to purchase additional electricity that I'm not receiving only so that I can get proof that I helped pay for renewable electricity to get shared into the system. Okay, so let's think about this. I'm already getting my electricity, but let's just say, um, yeah, so here's the thing. So I'm already getting my electricity, okay? And I personally have no clue where the electricity comes from. Honestly, I don't care much about it at all, right? But I imagine that at these days, there's a portion of my electricity that's coming from renewable sources, whether it be solar, wind, what have you. All right, so that's already happening. So I'm being asked to pay money to prove that a portion of my electricity is coming from a renewable source. Well, why would I ever want to do that if my electricity is already coming from a renewable source? You see what I'm saying? Like, imagine, and this takes me back to the demand, supply, demand, right? Because let's say there is no renewable energy coming into my home. There is no renewable energy coming into my business. Am I then being asked to pay to have renewable energy or a bigger portion of renewable energy come into my home or my business? If that's the case, then that means that there is now an agreement between me and my utility company that they're going to increase my portion of renewable energy coming into my home or my business. But that's not what's going on. See, that's the problem. The government has put all these programs in place, and I'll get to one here in a second. Yeah, here we go. The governor of New York um, has, and this is not just New York. These are a couple other states. I know California is doing something similar to this, which is saying that companies are being required to reduce their emissions. And one way you can do that is by proving that some source of your electricity comes from a renewable source. So in, in, instead of actually reducing um, your emissions, right? You can simply just pay to prove that some of your electricity is coming from these renewable sources. But it necessarily um, doesn't necessarily create the demand for the utility company to increase the renewable energy. I think what it does is it creates an incentive for the utility company to put this as an option on your bill because they already have renewable energy sources, right? So now they're just putting an option on your bill saying, hey, if you want to, you can pay um, for more uh, electricity. And so um, I just don't know if this is working or really doing what it's intended to do. It all seems a bit out there to me. But I'm going to put all of this information into the description so you can read it for yourself. Um, but basically, and this is kind of what I'm getting here. It says that uh, renewable energy credits provide you with the definite proof that you are using renewable energy, which investors and consumers love to see. And so, whenever I see something like that, right, investors and consumers love to see That lets me know that this is just a feel good thing, right? This is no different than I think it's ESG or something like that, where it's just making people feel good, spending money to make people feel good. One of the other things that was discussed in this earnings call, which again I roll my eyes at, is they went on and on at the beginning about how they are increasing their diversity as far as employees go. Now, you'd imagine, as a minority who is potentially receiving these benefits on a daily basis without knowing it, um, I just the company that I put my money into, the company that I invest in, I want to know that they're hiring the best people to do the job. I don't care about their gender. I don't care about their race. I want to make the most money and I want to spend the least amount of money doing it. Period. Period. Um, and what that means is that yes, I do not want you hiring based on gender or race at all. Meaning, I don't want you doing it because you like this particular race or gender, nor do I want you doing it because you don't like this particular race or gender. You know what I'm saying? Like, I want you to make the decision based on money, period. And so I don't know if these programs that I'm sure they're probably a part of, um, it, it's giving the desired effect. I think all it's doing is it's creating this incentive for companies to expout what they probably have already been doing. What I mean, they probably already have hired people not based on race or gender. I mean, my God, you know, how long has it been since we've had, the human resource rules in place that tell you about the things that you can't ask, the things that you can't hire for, the things you cannot hire for. I mean, we're all versed on this kind of stuff. Um, I don't think there's a human resource or a talent acquisition manager out there that doesn't know this stuff or adheres to it. I'm sure that internally this kind of stuff happens, but I think that has a lot more to do with personalities and character traits and this sort of thing more than it does gender and race. In all honesty, there's definitely some out there that do look at gender and race, but I think the oversized majority of it, it really has to do with who likes who. If you like somebody, they got the job. If you don't necessarily care for them, you're not cool with them, you don't hang out with them after work, you don't talk to them at the job, y'all don't have chit chats outside of just work, they're probably not going to get the position. And that's just human nature. Can we legislate that? Can we regulate that? We can definitely try. Honestly, I don't think it's a bad idea that we try to legislate morality, but we're not going to be able to get rid of all of it. And anytime I see someone grandstanding and expouting and exclaiming how great they're doing at hiring people that they don't like, it's just ridiculous. And I say it that way on purpose, right? Because again, there's no need to exclaim and talk about your diversity in hiring if in fact you are already doing it. So by exclaiming and expouting that you're doing that means that you weren't doing that in the first place. So that means you're expouting hiring people that you don't like or something. I don't know what else to call it. The other thing that I wanted to touch on just really quickly, 5 to 7% is and has been their target for quite some time. Um, but um, the dividend has not necessarily had that same sort of growth, and that is a bit disconcerting for me, looking at this business because if your growth is going at this 5 and 7% rate, but your dividend is not, then that means that you're shorting your shareholders. Simple as that. As you can see, this is Seeking Alpha, and they grade this company a C minus on the dividend growth rate over the course of a year. They have it listed at 3%. The sector median, this is the utility sector, is about 5%. So that's 37% lower than the sector. Over the past year, has gone to 5%. And I'm sorry, this is the last 12 months. Okay, trailing 12 months is what this means. Trailing 12 months. This is over the last year. Okay, which is 5 to 7 is what you'd expect when you have a company growing at 5 to 7%. 3 years, we see 3.5, which honestly is not far off from the rest of the sector. Um, but then we see this 3 year rate here, and it's horrible. It's minus 40%. And so I've only been following this company for not even a year, I don't think. And so I'm not sure exactly what is causing this lag, why they're not keeping up with their dividend growth as they keep talking about their steady growth in return on equity and revenue and so forth. I did run and look at the dividend history, and as you can see, just going back to 2013, for whatever reason, they were increasing the dividend by only 2 cents, which is roughly 2% a year. And it wasn't until just this year, 2021, that they jumped to a 5% increase, or 6% increase rather, from right here in August 2021. It went from 95 cents to $1.01. So supposedly they're going to look at this dividend every year, and it'll be really interesting to see if we're still in this position, whether or not they increase their dividend by another 5 or 6% next year. If they don't, I think that is something very telling of the company and how they feel about their shareholders.